Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day. The wheat stocks in the central pool have dropped precariously close to the minimum required levels because of lower procurement as farmers realized a better price in the open market. From an all-time high in 2021-22, procurement of wheat by the center this year is set to fall to a 15-year low. So, what do the dwindling central wheat stocks mean for the grains prices, procurement and production?
As global wheat prices scaled record highs this year, in part due to the Russia-Ukraine war, bread makers in India turned to multiple price increases. Today, a loaf of sliced brown bread costs 50 rupees while multi-grain bread costs 65 rupees. This is set to go up further. India's wheat stock in the central pool has fallen to barely over the buffer norms. The Food Corporation of India, which maintains stocks of wheat and rice in the central pool, is required to maintain a minimum quantity of the grains at the beginning of each quarter to take care of operational requirements and exigencies at any point of time. For wheat, this number is 27.58 million tons for the July to September 3-month period. Latest data shows that the stocks of the cereal maintained by India's Central Grain Procurement Agency as of July 1 are 28.51 million tons. This is due to the fall in procurement by Food Corporation of India and a decline in production in the 2021-22 crop marketing year. Usually, July 1 sees the peak stock levels as maximum wheat is procured in April, May and June. The last time wheat stocks in the central pool were lower than this on July 1 was back in 2008. In FY23 so far, the FCI has spent 37,852 crore rupees to procure 18.78 million tons of wheat, down nearly 59% from the same period last year. The procurement target has been revised downward to 19.5 million tons from the earlier 44.4 million tons. Last year, the government spent 85,600 crore rupees buying a record 43.34 million tons of wheat from farmers. This time, farmers chose to sell their wheat crop to private traders who offered prices higher than the minimum support price. Lower purchases by FCI, in turn, mean big savings for the government. Another reason for lower procurement is the drop in wheat production due to a sudden rise in temperatures in mid-March. Wheat production in the 2021-22 crop season ended June has been estimated at 106.41 million tons according to the third advance estimates. The government had initially forecast this year's wheat output at a record 111.32 million tons.
So my assessment on all this is that wheat prices are going to increase. This is because FCI will not immediately offload its stock in the open market yet, as they need to maintain the buffer stock norms. As farmers already preferred selling to the traders due to high market prices, and with the export ban, private stock with traders are already high. What this means is that millers will need to buy from the traders and prices will be inflated. It will further rise with the upcoming festive season when demand for wheat is high, and higher prices will also encourage farmers to sow more area under wheat, and we don't have similar heat wave conditions like this year, then there will be higher production next year with the increased acreage. Government of India would also like to procure more if they are extending the Garib Kalyan Yojana, after September, and if they increase the MSP, especially when fertilizer prices are going up, then you can see more procurement happening next year. June and July are the peak season when there is the highest stock in the FCI. But this year it has been low and it will start depleting from now because they need to offload this for various schemes and there is no further procurement coming up. So prices will go up for sure. So India is already exporting around 1.8 million tons of wheat to some countries like Afghanistan, Bangladesh, to meet their food security needs. So if the world demands, then India will have to export more, even though they have banned the exports.
With the heat wave curtailing output and pushing domestic prices to record highs, the government banned most wheat exports from mid-May. It also reduced the allocation of wheat in the PM Garib Kalyan Yojana and the National Food Security Act. The FCI is also not expected to conduct any open market sales this year, putting pressure on domestic prices. With wheat being a rabi crop, the next harvest is a long time away. The fallout from global and local factors means there is no relief on the horizon for consumers.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Starbucks and Sardar Baksh, Facebook and Facebake, Burger King and Burger Singh. These are prime examples of Indian brands with names that sound quite similar to those of better known, larger and often foreign brands. Some of these examples have even ended up in legal action as big brands intensify their battle against copycats. So, what's driving the problem of copycat brand names in India? Also, how does India fare in protecting trademark rights? Today's segment will seek to answer these questions.
Recently, the Delhi High Court permanently restrained a Bengaluru-based cake shop from using the name Facebake, Facecake or any other Facebook trademarks for its products and services. The order was the result of a suit filed by Meta Platforms that owns Facebook. Facebake was also using the same font and blue on white color scheme popularized by the social media giant. Brands fiercely guard their unique identity as it is crucial for protecting market share. In a trademark infringement action by BMW, the Delhi High Court in 2020 granted an interim injunction restraining an e-rickshaw maker from using the mark DMW. In the Starbucks Corporation versus Sardar Baksh Coffee case, the Delhi High Court in 2018 granted interim relief in favor of Starbucks and directed the defendant to use the name Sardar Ji Baksh for their 20 new outlets until the final hearing. The final result was that the defendant had to change the name of all its outlets to Sardar Ji Baksh Coffee & Co.
Where does the problem start? It starts from the fact that your original brand name, in this case, say Make My Trip, the words make, the word my and the word trip, none of them is unique. So you do not actually have protection or individual words being used which come together to form the brand name. The only way out is if you have a unique design or a unique logo or unique color combinations which can create a stronger IP which cannot be copied, because words alone can always lead to problems because none of them or most of them are normally not unique. But if you have created words, for example, Gorffer, Gorffr, now that is a word which is not easy to copy and is therefore patentable or, at least be converted into a valid IP. So when looking at brand names, you got to be very clear that you must have something in your brand which is unique.
A brand name and logo are legally called trademarks. A trademark denotes the distinctiveness and integrity of a business. For the consumer, it also acts as a source identifier for the brand's offerings. Registering a trademark or even using one with or without registration gives the owner of the trademark certain rights. Subsequently, no other entity can register or use an identical or confusingly similar trademark for identical or similar offerings, unless they are authorized by the original proprietor. The Trademarks Act 1999 is the law that protects trademarks in India. It lays down the rules for registration, protection, and infringement penalties regarding trademarks. The misuse of trademarks across several e-commerce portals has seen companies across all scales fiercely guarding their IP rights, especially trademarks. One result of this has been that the total cases for trial during the given year under the Trademarks Act 1999 have been rising at a fast clip since 2016. However, as an indication of how challenging this area is for companies and courts alike, the pendency percentage has averaged above 95 between 2016 and 2020.
Now, most of these battles, when it comes to trade names and trademarks, are over at the interlocutory stage. So the real battle that you are fighting is getting an interlocutory injunction that is stopping the person immediately from using your brand. And that's where courts are very, very fast. Ultimately, the trial is going to take a long time because it is a process, right? You have to lead your evidence, you have to make out your case for damages, etc. But once your interlocutory relief is granted to you, half your battle is won. The second aspect is that there is a new statute which has come into force, which is the Commercial Courts Act, as we call it, by virtue of which intellectual property disputes are treated as commercial disputes. And there is a fast track mechanism which is being set out under the statute. There are various new provisions which have come in by virtue of which where it is very straightforward and there is really no answer to a trademark infringement. Brand owners may be in a position to get a summary disposal of the proceedings also. And this has started now. It's a process, of course. It's likely to take speed.
However, Burger King and Burger Sing have been coexisting peacefully. Many pizza outlets with similar names also exist in the same space. Legal experts say that this is because terms like burger are wide and can't be associated with just one brand. Finally, the Office of the US Trade Representative recently said in a report that India remains one of the most challenging major economies when it comes to the protection and enforcement of intellectual property. This can prove to be a significant dampener. A business has to create brand recognition and value to thrive in a competitive market. This is achieved by way of trademarks. If India wants these businesses to invest in it, regulators must ensure that their hard-earned IP is protected.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Equity markets wilted under selling pressure during 4 out of 5 trading sessions last week amid fears of steeper interest rate hikes. Our next report delves into the likely triggers for the markets this week and the key levels that investors should watch out for. Equity markets consolidated last week after hitting one-month highs during the previous fortnight. Analysts believe the disconnect between the global and domestic economy, which stems from record high inflation in major economies but easing of price rise back home, may keep valuations depressed in the near term. The US recorded June inflation at 9.1%, the highest reading since 1981. India's CPI inflation, on the flip side, eased for the second consecutive month to 7.01% last month. Given this, analysts expect the US Federal Reserve to stay aggressive with rate hikes. According to VK Vijay Kumar, global equity markets are likely to remain turbulent till the US Fed's meeting on July 27th. The most likely policy action by the Fed would be a 75 BPS rate hike, but even a 100 BPS hike cannot be ruled out. Overall, the BSE Sensex index shed 721 points or over 1% during the week, while the Nifty declined 1%. Technical analysts believe traders can go long on benchmark indices if they hold above 100 weekly moving averages.
This market is tilting downward. But if both the indices, Sensex and Nifty, manages to hold ground above the support of 100 weekly moving average, for Sensex, the average stands at 52,100. For Nifty, it comes to 15,500. If both the indices manages to hold this level on weekly closing basis, one could definitely say the present condition, the present scenario and the trend is giving opportunities for accumulation. On the upper side, Sensex can rally 57,100 and Nifty can rally up to 70,000, which are 50 weekly moving average. So both these indices are basically stuck within this average of 100 weekly moving average and 50 weekly moving averages. As far as Bank Nifty is concerned, the 100 weekly moving average comes to 33,600 and it can move to 50 weekly moving average, which stands at 36,400 levels.
Fundamentally, June quarter earnings will be the key trigger for equities. Ambuja Cements, Hindustan Unilever, IndusInd Bank, Wipro, Ultratech Cement and ICICI Bank are some of the prominent companies slated to announce their Q1 results this week. That apart, volatility in commodity prices, global cues and movement of rupee against the dollar will drive the sentiment. The domestic currency closed at 79.87 per US dollar last Friday after hitting a record low of 79.96 during the day. According to forex experts, 79.25 is a key resistance zone for the rupee. They see the domestic currency trading within a range of 79.50 to 80.50 this week.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
With the popularity of the internet and video streaming services, more and more people are consuming content online. With this increase comes piracy, and the statistics are alarming. Pirated video material gets over 230 billion views a year, according to data prod. And digital video and music piracy is costing the US economy billions each year. So, what is digital piracy? Let's take a peek into its dark world.
Jumping a red light and downloading movies or series from torrent and a myriad of other websites are both illegal and punishable under the law. But how many of us think twice before hitting that tab to download copyrighted content? Over a decade ago, pirated PC games were all the rage, and Delhi's infamous Palika Bazaar did brisk business by selling them. A set of CDs used to cost from 500 to 30 rupees, depending on who you are, a confused newcomer or a repeat visitor who has struck a chord with the shopkeepers. Now, in the digital age, piracy is prevalent as consumers look to dodge the charges demanded by premium streaming sites or catch the latest cricket match or big screen release for free. So what exactly is digital piracy? The term refers to the illegal copying or distribution of any copyrighted material through the internet. Primarily, it has a negative impact on the revenues of creative industries like film, TV, publishing, music, and gaming. Their losses run into billions of dollars every year, meaning that less ends up being spent on creating new content and jobs in these industries. Online piracy has a larger economic impact because it cuts into government revenue streams. According to Dataprot, the annual global revenue losses from digital piracy are anywhere between $40 billion and $97 billion for the world's movie industries. According to a joint report published by Akamai and Musso, India ranked third in consuming pirated content in 2021. Between January 2021 and September 2021, India recorded 6.5 billion visits to piracy websites, after the US at 13.5 billion and Russia at 7.2 billion. It might appear to be a victimless crime, but the criminals operating these pirate websites can sometimes be a part of dangerous organized crime groups who use your money for committing far more serious offenses.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.